Let's analyze together the latest crash of Nvidia Corporation and the rebound that we are experiencing today. Yesterday, it went down like minus 16%. Remember to read the disclaimer right here, and let's start with the analysis because I'm not a fortune teller. I don't have a crystal ball right here to detect and to see the future, but I can tell you guys, technical analysis and fundamental analysis are the best tools we can use in order to assess if this is like a crash or just a correction. Guys, what we have right here, the support level, the first technical analysis item that we have, this was a resistance level before, but it was broken out right here in October 2024. And then if we go to the daily chart, obviously we go backwards and you can see this trend line, incredible trend line that started back in December 2022. Until today, it has been broken. And that's one of the important signals that maybe this is the end of the general upturn of Nvidia Corporation. Obviously, if we take into consideration the forecast, it's been like it's still good, the forecast in terms of what analysts from Wall Street think about this stock. We have a general average of more than 38% from current levels, of course, and then the maximum, the most optimistic one, plus 74%, 220. That would be insane, if it goes there back again. Then we have the estimated EPS forecast and the revenue forecast. Also good, because we have an estimate of 0.84, which is better than the previous quarter. Even it reported earnings was 0.81. So according to this, and if it's true, if it comes to reality, the net income will continue to increase every quarter. So even though obviously we have the DeepSeek app that has been released and apparently it's really good, and that could be like a risk to the monopoly of Nvidia. But we are not there yet, we have to wait and see. For the short term, it's not gonna affect that much, especially for the next quarter. But then again, if we see like a decrease in the demand of Nvidia because of this, we will see in the next quarters, in the coming quarters. But for now, obviously the EPS forecast and the revenue forecast would change because this is like the future. The present is right here, the last quarter. That's the past on the left, and then we have the future on the right. We have 4 quarters, and if the analysts from Wall Street change that forecast, for instance, if we have an estimate below the previous quarter, that would be like a very dangerous signal. Like I see stocks with an upcoming quarter that is worse, just the estimate, the worse and way worse than the previous one or the last or the current one. That's like a dangerous signal because they are saying that the stock is not gonna grow anymore, at least in the next quarter. So you have to take into consideration those signals. We don't see them yet here, and that's a positive thing. And maybe that's one of the reasons probably the stock is rebounding at this particular level. But remember, guys, the news are the news. So obviously we have an impact right here, which is very, very severe, and it can have an impact in the long term. So obviously, for instance, from the technical analysis perspective, if we see the stock rebounding, for instance, to 144 and then going back again, that would be a dangerous signal. But obviously, the new support level that we have established on Nvidia Corporations is right here, the bottom of the last downtrend, 116. That would be the 117, I would say, obviously a little bit right here. Yeah, that's the main level that we have. And the second level is 90, I don't know if it's gonna get there, but it's there. That's the main resistance level, or support level actually, that could hit. But it's a long way to go. Obviously, Nvidia has gone up since it's completely insane. Obviously, you're thinking the long term. There's a long way to go. We're talking about, let's see the performance from October 2022, more than 1000%. Completely insane, but obviously there is a risk right there because of that, because if it starts to go down, you're facing a lot of risk. If it goes down, for instance, to 20, I don't know if it's gonna get that, but 30, for instance, $30, which is the levels seen back in May 2023, not so long ago, and that would be like a minus 80%. If you buy right now, there's a risky situation with Nvidia. That's probably the reason I don't like to buy stocks at this particular level. One of the strategies that I follow, and actually that's just my opinion, but you can follow that strategy too, is the MACD and RSI. You go to the weekly chart, let's activate the logarithmic scale to see things properly. You go to the weekly chart, and you can see the RSI right here in the middle and the MACD below. You can actually activate the logarithmic scale in the MACD. I'm the type of guy that likes to buy stocks, obviously, always with positive net income, always with good forecasts in that sense, or at least not too bad. And then we have like the opportunity, the buying opportunity. The strategy that I follow is to buy right here in the MACD and the RSI at these areas. When it hits the RSI at the bottom in the weekly chart, and we're talking about levels below 35, 39 even, you can buy at those levels in terms of risk management is way better than buying at the top, because you are facing a lot of risks. Those that bought that at the top Nvidia back, for instance, in November 2021, they face like a minus 70%. That's a lot, And the last time, for instance, in October 2018, another minus 60%. That's a lot of risk right there, It's not worth it to buy at the top of the indicators. The opposite comes true as well. If you buy at the bottom, is the better level, is the level better, the best level to buy. And actually look at the MACD. Again, you can follow the RSI strategy, and the MACD is signaling the same buying signal. Sometimes simple things are best. People don't notice that, but I just follow this strategy, and it works best in many stocks, in indices, in all sort of, assets. So obviously, this is you had to be patient. You don't have so many signals. Maybe in the last 20 years, you have like 11, 12 buying signals, but they are the most reliable in the sense. Obviously, the only risk you are facing is not even the market crashing in general. I would say the general risk is buying a company with a lower market, with a low market, a small market cap, with a small cap, I don't know, 1 billion, 2 billion, with a lot of volatility, and that is in losses. If you buy a stock that is in losses, or that is going to be in losses, in negative net income, or that the net income is just dropping, that's the risk you are facing, because you don't know exactly the bottom of it. Maybe it continues to go down, it continues to make new lows in terms of net income, and the stocks follow. The price action tends to follow that, and that's the risk you're facing. I can show you many examples of it. Nvidia is not one of those at this particular point. It could be, anything can happen. If you take into consideration the S&P 500, the top market caps of the S&P 500 in 2000, we're talking about IBM, Nokia. Look at what happened afterwards. They are nothing today. So anything can happen in the markets, but you have to follow the trends, and assess the risk every time. If you don't want to buy stocks, you can buy the S&P 500, and you don't have to think about it anymore. So these are the main tips of this stock right now. I hope you liked the video. Remember to subscribe to Trading ST to watch more content like this, and see you in the next one. Trading ST, honest trading.